What's up everybody, welcome back to the Art of Crypto, the birthplace of absolutely legendary gains. In this video we are going to talk about ADA, since a lot of you are involved in ADA and people are asking for an ADA update. So here you go. So if you want to find out exactly if ADA is going to go down, is it going to go up, as well as the exact levels that I will be paying attention to for ADA, then you're going to want to watch till the end of this video. But right before I do, a lot of people are talking about the ETH London hard fork event. And if you're watching this, hopefully by the time that you're watching this, if there is one thing that you should keep in mind, is that people usually, they usually buy the rumor and sell the news. So in this case, just don't get too irrationally invested, just don't get too irrationally invested in this news event, because usually people sell the news, They're not buying the news. So just keep that in mind. And if ETH goes down, there's a very good chance that BTC follows as well. In fact, at the moment, we are already seeing this event start to unfold, BTC and ETH have already started dumping. So just something that you want to pay attention to. And if you watch the video that I made yesterday, you would have known how to use the DeFi perp, the NFT dominant, as well as the Total 2 chart to your advantage. So if you haven't already watched yesterday's video, make sure you do so. While it's about BNB, there are a lot of concepts there that you will learn just from watching that video. Sorry for that extended intro, let's dive into ADA now. So immediately, I want to draw your attention to just a couple of things, The first of which is on the daily chart. Are we bullish on ADA on a higher time frame? So if we just draw, something like this, This is the high, this is the low, and then we form a lower high, and then we form a, I guess you could say this is a lower low or an equal low, and then we form another lower high, and then we form a higher low. Technically, this is a higher low. And then at the moment, it does seem as though we are forming a lower high, As long as this daily candle closes and it starts dumping, then this would have been a lower high. Now, why does this matter? So if there's one thing that I just want to bring your attention to, ADA holders, you might not like this, but I have to put the truth in front of you when I see it. So if we just draw this trend line, or rather this neckline right here, and we draw a head and shoulders pattern, you can see that at the moment we are sort of forming a head and shoulders formation, This is what you call a complex head and shoulders. It is not, the prettiest head and shoulders. This is what you call a complex one, where, you have multiple parts that form the shoulder and you have multiple parts that form, the neck. Now, the reason why this is called a complex head and shoulders is because you have multiple parts forming the shoulders and potentially multiple parts forming the head as well. So this is what you call a complex head and shoulders. And if you know anything about the technical analysis patterns, you know that these patterns tend to break downwards, They tend to break downwards. But let me just put into perspective why this pattern is not all that matters. So firstly, what I would have liked to see happen was for ADA to at least form a higher high. So in this case, it actually did. So if you just look at this candle right here, notice how the high of this candle was taller than the two candles right next to it. And this is on the daily chart, mind you. So on the daily chart, this is what you call a previous swing high. In fact, you could argue that this is a previous swing high as well, because, technically speaking, this is a swing high. But for all intensive purposes, let's stick to this one at about, 1.37. I'm not going to mark it down because it's not important. What is important though is that we have already broken market structure towards the upside. What do I mean by that? So if you just take a look at this swing high right here, we've already broken through this on a macro time frame, That is the daily time frame. And all this means, the way you use this information is to determine the trend on an institutional perspective, A lot of retail traders, they're gonna go hey, the MACD or Market Cipher hasn't flashed bullish yet. Maybe they're looking at money flow or RSI or whatever. That's how retail trades. And is there anything wrong with that? Perhaps not. But at least over here at this channel, we trade using an institutional perspective, and these swing highs are really important to determine whether or not a coin or any asset is bullish or bearish. So in this case, I would argue that ADA is already bullish simply because we have attacked all of these previous highs. Now, the reason why I say ADA attacked these previous highs is that the way you want to use these swing highs, the way you want to use them is you simply want to mark them down. So for example, over here we have a swing high. Over here we had a swing high as well, and the next one would be right up here. So if you just mark down all these swing highs, and you notice how I write protected highs, right? I don't write swing highs, I write protected. And that is because, right, you want to visualize it this way. Imagine if an institution were going short on ADA, not just a institution, or rather the institutions. So imagine if an institution, right, the big boys basically, imagine if they were short on ADA, like from here. Assuming that you were that institution, would you, in your right mind, allow the price to come back up to your previous level in order to stop you out? I would argue not really, right? You wouldn't let the price go back to this previous level. So what you do is you sort of create lower highs and lower highs and lower highs, and hence the term protected, right? The institutions are protecting their position. And that's why it's so important that we know what the institutions are doing, because as long as these protected highs continue to get attacked, right? For me, the indication when something has switched bullish is for a protected high to get attacked, right? To get violated. In this case, we had actually 2 protected highs that got violated so far. So this pretty much confirms the bullish bias. So in this case, we should be looking to be a buyer in terms of ADA. And again, the reason why it's so important to know what these institutions are doing is because similar to the concept of protected highs, we have protected lows as well. This is areas that institutions, as long as they remain to be bullish, they will not let the price come and attack these previous lows. As long as they're bullish, it's not going to violate it. So this is how you use swing highs and swing lows to your advantage. And again, this is on the daily chart. A lot of retail traders, they're trading on let's say, the 1 minute chart. Oh, hey, it's pumping on the 1 minute. Hey, it's going to the moon. It's forming a triangle. It's forming a bull flag on the 1 minute. Boys, it's time to hop in. Call the gang, sell the house, sell the car. It's time to jump in. I am an expert trader, and right now I see a bull flag on the 1 minute. It's time to hop in, boys. That's that's a lot of retail traders, right? And I hate to break it to you, but the only ones who are trading on the on the lower time frames, like the minute charts or maybe the 15-minute, probably as long as it's below the 1 hourly time frame. I hate to break it to you, but the only ones trading those time frames are algorithms, right? Quant algorithms that were developed by hedge funds and the big institutions in order to automate their scalping, and those are the ones who are trading on the lower time frames. So in order to trade successfully on a lower time frame, you have to understand how these algos are programmed, or at the very least you should have a very clear understanding of market structure as well as potentially Wyckoff in order to trade those timeframes effectively. So if you are if you're a beginner trader and you don't understand market structure, you don't understand Wyckoff, you don't understand zones of liquidity, you don't understand quote unquote supply and demand, then I don't recommend you trade on the lower time frames, right? Stick to at least the 4 hourly and above, right? It's going to make your trading so much easier. You're not going to get as many trades, but I always like to say this: more trades does not equal more money. All of us are conditioned to think, because we are from a traditional, hey, you go to a job, if you work 12 hours, you're probably going to get paid more than if you worked 8 hours, right? That's how a job works. That's how we're all conditioned to think. But that's not trading, right? Trading is not like a job. In trading, I would like to argue that the more you trade, the more chances you have of getting wrecked, right? Because nobody has a 100% win rate. So the more trades you take is just more chances for you to get, to screw up. And so pick and choose the best trades. You don't need to trade every day. People who do, while it may work for them, but for most of you, you would fall under the category of overtrading if you're trading every day. Heck, even I don't trade every day. But anyways, let's finally get done on the daily chart, and now we can go onto the 4 hourly chart and identify some areas of value that we can buy ADA at. So that was my explanation of why ADA is bullish in the, it's probably bullish, and it should continue to be bullish over the next few weeks to a few months. However, over here at this channel, we are grand strategists. We never ever purely go off or be overly biased towards any given direction, because there is another aspect of, there is the negative, because there is the bearish scenario that I do want to bring to your attention, and that has to do with this heads and shoulders pattern right here and this neckline right here. So right now I'm on the weekly chart for ADA, and I just want to zoom out a little bit, and I want to bring your attention, right? Let's just zoom in a tiny bit, and I want to bring your attention to the right side here, right? This is what you call the VPVR indicator. And for those of you wondering how to get that, you just go onto your indicators and search for visible range. Again, this is a paid indicator. If you want a $30 off discount code for TradingView, you're going to want to go to the link in the description and use the promo code. But anyways, the reason why I bring up the VPVR indicator is because I want you to take a look at the volume, right? Basically, the more volume there is means that traders agree that this is a fair price of the asset, right? For example, many traders agree that ADA in between 0.13 cents to about 18 cents ish, that is a fair price for ADA, and they would very gladly pick up ADA over there. Not only that, but 30 plus cents, right? 30 cents to 40 cents ish, they do agree that ADA is a fair price over there. However, in between these two levels, I just want to bring your attention to this part right here, right? In this entire block here, right? Notice how the price pretty much just did a straight pump, right? There were no retracements. It was just a straight pump from 40 cents up to about, 80 cents ish. Now, why does this matter? For starters, this is what you call, right? This area right here is what you call an inefficiency. And for most people, a more familiar word or a more familiar way of explaining things, this is what you call a CME futures gap. So usually, right? Usually, inefficiencies tend to get filled. Now, if we just go on to, let's say Bitcoin, right? During this entire pump here, right now I'm just giving you a really random example. So notice how during this pump here, we left an area of inefficiency back here. So notice what happens later on, right? We come down and fill it. And you could argue that there is still areas of inefficiency around here, right? If you just take a look at the volume, there's inefficiency there, there's inefficiency there. And the next area where the market agrees that that is the fair value of Bitcoin will be about 20K. Now, if I see signs that we're going back to 20K, I will make a video for sure. But for now, I just wanted to use Bitcoin to explain things to you that inefficiencies, right, more likely than not, they tend to get filled. So the bearish scenario would be for ADA to actually, right, break this level at $1, right? And before that happens, right, you're going to want to look for all these protected lows to get violated. So I'm just going to mark them down right now on the chart so that you understand the levels later. But for ADA to be bearish, you want to see all three of these protected lows on the daily chart to get violated. They would be at $1.25, $1.19, and $1.15. Now, if ADA decides to violate all of these, right, and then we also just draw a little fib retracement from swing high to swing low, and you really do not want to see ADA drop below, $1.11, right? Because that's where the 0.286 fib level is. And usually, if you do break below that line, it's not going to be pretty, right? Expect this neckline to get broken at $1. So the second scenario for ADA to be bearish is for a very simple reason, actually. It's not as hard as you might think. So if you notice how many times ADA has held this support at $1, that's a whole lot of times, am I right? That's about like what, 1, 2, 3, 4, 5, 6, 7, 8, about 8 to 10 times it has held the support at $1. And I would argue that, a lot of retail, right, they fall into the trap of thinking, hey, the more times a support is tested and holds, then the more strong the support is. But I would immediately tell you that that is exactly what the institutions want you to think. The more times a support line is tested and holds, the less strong it is. And I'll explain it right after you drop a like on this video. Now, if you feel like you've learned something so far in this video, it would help me so much if you just like the video. It's a really small gesture, but it helps me a ton. So think about it this way, right? The more times a support gets tested, the more retail is going to be thinking like, hey, look at this. This is strong support. We should buy at support because it is strong support. ADA will not drop below $1. So let us go on 100x leverage and we buy ADA at $1 because ADA will go to the moon after it hits the $1. Sorry about that. I don't know what that accent is either. But you see the flaw in that, right? You see the flaw in that because institutions, they really like to stop out the liquidity in the market, right? They know where the areas of liquidity are. And by areas of liquidity, all I mean is imagine if everyone starts going long at this level. Let's assume, where would everyone place their stop loss? I would assume that they would place it somewhere below this level, yeah? Which means as long as the institutions push the price below this level, there's going to be a massive cascade of either liquidations or people getting stopped out. And that's exactly what the institutions want you. That's exactly what they're looking for. Because at the end of the day, you have to understand that these whales, as well as the institutions, they're playing with multiple hundreds of millions to potentially billions of dollars. And they are not going to, they're not going to buy anything in the middle of nowhere because they'll get wrecked by slippage. Yeah. So they want to fill their positions, their largest positions, at areas of liquidity. And by areas of liquidity, I mean areas where people are setting their stop losses. Because imagine if if you're selling here, right, because your stop loss triggered, if you're selling, guess who's buying? That's right, the institutions, and then they're going to push the price up because they stopped everyone out here. So do not ever fall into the trap of thinking, hey, test it so many times, buy here, right? What you do is you look to buy slightly lower because that's where the institutions will push the price to, right? Imagine everyone gets stopped out, it goes a little bit lower, you buy a little bit lower, and you've caught the exact bottom. So think about it that way, okay? Stop thinking like retail. So I know that was a very, very drawn out explanation, but I really hope you learned something new. Right now, let's finally get into how to trade this. Like, how do we put that knowledge into use? So firstly, let's discuss the bullish scenario and exactly how I would trade the bullish scenario. So if you just take a look right here, we have formed equal highs like 3 times. Remember what I said about that support thing? The same thing goes for resistance, right? The more times something gets tested, there is going to be a buildup of liquidity. Markets, or rather the institutions, will always push the markets to an area of high liquidity and to attack, Remember what I said in the beginning of the video, where as long as something is bullish, you expect previous protected highs to get attacked, right? And that basically means all of these levels above here, right? Expect them to get attacked, right? All these levels, expect them to get attacked as long as we remain bullish. So in the bullish scenario, right, I'm going to want to mark down this level right here at 1.39. Now, this level is important because not only is this, the next area of liquidity, right? Again, build up of liquidity up here because retail is going to think like, hey, strong resistance, we short here, where's the stop loss? Right above. So this is an area of liquidity that as long as we remain bullish, it will get attacked, right? And it will get violated. So on the bullish scenario, I'm going to want to buy a breakout of this level right here, right? And that means as the price is breaking out above this level, you're going to want to buy it, along with the breakout, or as it breaks out and comes back down for a retest, that's where you want to buy. Now, the reason why I suggest these 2 kinds of entries is because you can just set your stop loss right below that level. And, if the price does fall back down, then your trade gets invalidated. No, absolutely no problem. Because we all know that previous resistance tends to become future support. But if it doesn't become future support and it comes back down below this level, then you just get stopped out for a small loss. Now, what you need to understand is that the best traders in the world are wrong about half the time, and yet they're still wildly profitable. So it's okay to make mistakes. It's not okay for any single mistake to absolutely blow up your account. So that's going to be the bullish scenario, and the take profit levels, right? Again, just use these previous highs, right? Because as long as something is bullish, you expect these previous highs to get attacked. So in this case, I'm going to mark it down for you guys. So make sure you take some time to pause the video and mark down these levels by yourselves later on. Now, the way that I'm going to use these take profit levels is, again, dollar cost average, right? Because nobody knows where's the exact top. While I say that these highs are going to get attacked, what if maybe you come to this point and then you get a pullback, right? Nobody knows where's the exact top. That's why if you take 25% here, 25% here, 25% here, and maybe you take the rest here. Doing so will allow you to secure your profits on the way up. And I'm not going to repeat this for the ones who already watch my channel for quite a bit, but once you take a position, remember everything that you do from that point on is painful. Remember, for me, I am much more willing to accept taking profits early because I know that these small gains over time compound into massive gains. In fact, if you want to think about it this way, right? I know this video has been very educational, and I hope you learned something new here. I want you to think of your trading career as an exponential curve, right? In an exponential curve, absolutely nothing happens for the longest amount of time in the beginning, right? And then you start taking off. This is how you should think about your trading career, right? You don't need those like massive wins like, oh, buy Dogecoin at 0.001 cent or something and then watch it go up to $1. That's not the kind of win that you want to look for, because 1% each day will net you something like this over the course of a year, right? As long as you can try to get 1% each day on your account, and that is very possible when you're dealing with crypto. But again, I'm not saying everyone's going to trade, everyone's going to gain 1% a day on their account, because then you would be out trading literally every single hedge fund out there. And, I don't want to make some crazy promises, but I just want you to visualize that all you need is those small little gains every single day, and eventually your account is going to look like that, okay? So cherish the small gains and understand the power of the compound effect. So that is the bullish scenario. And the bearish scenario, again, as discussed previously, would be a break below of this $1 level right here. And then what I'm going to do is I'm going to short the breakdown of that level, right? And if we go back onto the daily chart, because we need the daily chart for this, if we assume that these inefficiencies are going to get filled, right, then the final target for ADA would actually fall somewhere around 37 cents to 40 cents. Right, so we're just going to want to mark down those two levels. And I know that is a 60% drop from this point onwards. So if you're shorting, congratulations. And, you know, to be absolutely perfectly safe, right, you would even want to short right before, like right after the break of this level. So a short below this level right here, right? You want to short after it breaks 80 cents, because over here is what you call an order block. I'm not going to get into order blocks in this video because it's already way too long, but this is going to be the bearish scenario for Cardano. If it breaks below, you know, if it breaks below $1, yeah, expect it to come down to the ballpark of about 45 cents, right? Just pay that in mind. Remember, we have a complex head and shoulders forming right now. This is generally a bearish pattern, and we have a massive chunk of imbalance over here that, you know, I wouldn't be surprised if we fill this, you know, in the upcoming weeks, maybe months. It all depends, right? I've given you how to identify when something is bullish. I've given you how to identify when something is bearish. So just look for those signs when you're doing your trading. I will leave it to you guys to determine whether or not something is bullish or bearish, because, hey, everyone's got to learn at some point. And just remember that pullbacks during an uptrend, right? Pullbacks when you are bullish in terms of order flow is a area to buy, right? You want to look to be a buyer during an uptrend, and you want to look to be a seller during a downtrend, right? Makes sense? At the moment, Cardano is still in an uptrend, so I will look to be a buyer until proven otherwise. And I just wanted to say that if you follow me for some period of time now, you would understand that I'm pretty accurate a lot of the time with my predictions and with my calls. And if you are, you know, just serious about your trading career, maybe you want to do this crypto thing for, you know, full time, and you just want to learn like how I do this, right? You're going to want to check out the private Discord group. Over here, you're going to get access to everything that I know, right? Basically everything that I know, I'm laying it all down in this course right here. And, you know, if you've ever just wondered why 90% of the things that you've learned are pretty much useless, then if you just want to learn the 10% of things that work, you know, join the Discord group. As a bonus, you're going to get access to profitable trading setups every single day, where we are making profit every single day. So trust me when I say this group is going to pay itself off real quick. So if you're interested, currently I've already closed monthly signups for at least a month. So if you want to join right now, just head to the link in the description and sign up, and I'll see you in the Discord group if you're serious about taking your trading game to the next level. Remember to follow me on Twitter in order to get the latest market updates. Link is in the description as well. And just remember to watch the previous video I made in order to understand how to use DeFi perp, how to use NFT dominance, you know, total 2, all these major charts to your trading advantage. And remember to mark down all these levels, yeah? I've already given you the exact levels that I will be looking for ADA. So if you can't even take the time to mark down these levels yourselves, there is nothing more that I can do for you, my friend. And with that said, see you in the Discord group. May the gains be with you, and peace.